discussion on why we should invest in a Sacco. And as I finish, I'll convince you on why you need to invest in KMA regulated non-withdrawable deposit taking Sacco, our very own. So welcome for this discussion. We kick off with the money cycle. All of us derive some income, whether through employment, through business, in consultancies, farming, and our various sources. Some people blow it out. It is within their right, but smart people do some savings. And this particular one is geared towards saving within a Sacco because of the benefits we are going to see. Once you save, again, you need to borrow. Don't save without borrowing. The secret to generating wealth is other people's money. When you borrow, please invest. Don't misappropriate the loans so that they can trickle into more investments and more income, and it becomes a beautiful money cycle. So for you to save, you need to understand the overview of the financial sector. And within the Kenyan space, we've got around 42 commercial banks. We have 172 deposit taking Saccos. These are the Saccos with the FOSAs, front office savings accounts. We are 185 non-withdrawable deposit taking Saccos. That is where KMA Sacco lies with effect from last year in July. We have some other over 2,000 active Saccos that are yet to be regulated. 14 microfinance institutions, the microfinance banks. We have around 55 insurance companies currently, some 32 retirement benefit schemes, the umbrella ones, there are many more. And we also have other players within the financial sector. Basically the mobile money lenders, we also have the Shylocks within that category, and other non-regulated entities. So the financial players within our economy are regulated. The central bank regulates the banks and microfinance institutions. SASRA, the Sacco Society's regulatory authority, regulates the deposit-taking Saccos. And recently, with effect from last year, they are regulating the non-deposit-taking Saccos with the deposits of 100 million and above, the diaspora Saccos, and the digital Saccos. RBA is the Retirement Benefits Authority that regulates the retirement benefit schemes, the pension funds, and sometimes the fund managers who invest those members' funds. We have the Insurance Regulatory Authority that regulates insurance companies and insurance agencies. We happen to run an insurance agency that is regulated by IRA. Those Saccos that are not under SASRA are still under the Commissioner of Cooperatives. And in fact, all Saccos are registered by the Commissioner. Then Capital Markets Authority regulates the fund managers, the money market funds, the wealth management funds, and other players within the industry. So basically, we are looking at why invest in a Sacco. And Sacco basically means savings and credit. The savings culture in Africa is a bit low. So some people prefer starting with the credit rather than the savings. But Sacco is basically an association of like-minded individuals who come together and seek registration at the commissioner. Then they are authorized to deal with members. Once that association is formed, then the Saccos come together with bylaws that govern their operations. And that is what guides the operations of Saccos. It is basically a members club. That is how we display the association, basically interested like-minded parties like doctors coming together, and they form a Sacco, a savings and credit cooperative. I like reminding people about the Sacco model, whereby a Sacco is owned by the member. The member is also the customer. And the work of the member, the duty of the member to the Sacco is to pump in savings as much as possible. The SACCO is bound to give the member loans at below market, basically 12% being the traditional product. However, there are other non-traditional products, basically brought about by innovation and product diversification. When the member borrows the funds, please don't cut corners. You are bound to return the funds back to the SACCO with a little interest. And at the end of the year, whatever profitability that the SACCO comes across is returned back to the member in terms of dividends and interest on deposits. So a SACCO is basically a beautiful members club, as SACCOs are not allowed to deal with non-members. You must join the SACCO first, become a member, you participate in partaking the products, and you benefit. It is not open to the public. Some people compare SACCOs to banks, and allow me to bring out the distinction today. A bank is owned by investors, and the work of the investor is to make money from the customer. Occasionally, they invest their savings, as they also call us to take our monies to them. Sometimes they load us with bank charges, not sometimes, but always. And in some circumstances, you can borrow from the bank what they say, either secured or unsecured loan. But to the best of my understanding, there is no unsecured loan. When you look at the recoveries, it is done immediately after pay as you earn. If they had a way of overtaking the taxation, they would do it first. And of course, there's some guarantee they get from the HR department for employed people, and from your deposits if you are a businessman. Once we borrow from the banks, we are bound to pay the loan with a lot of interest, not little interest. We have no choice. And at the end of the day, whatever profit the bank makes goes to the investors. The customer has nothing to show for it, unless you have some shareholding where you get some little dividends. So basically, that is an overview of some of the charges that you will come across when you visit your bank. Some of them are packaged so nicely, you may not realize. Phrases like just 1,500 premier class with an accompanying cup of coffee when you visit the branch, because you rarely do it. And in case you visit the branch, you'll be served so fast, you may not have time for the coffee as you rush to theater. Basically, when the major distinction between a SACCO is that SACCOs perform what you call financial mobilization, whereby they stress the ability of the members to acquire resources and also guide the members towards accomplishing the SACCO's goals. It is maximizing the members' welfare. That is what you call financial mobilization. The funds that members save in SACCOs remain their property, and they are available to the members to either borrow against, withdraw, and continue earning dividends. This is in contrast to what the banks do. Banks perform what you call financial intermediation. Intermediation is basically a middleman to link those with surplus funds with those without. And once you deposit your money in the bank, it becomes the bank's money. It is for the bank to decide what to do with it. And the profit that derives out of the bank goes to the investors. So that is basically the major difference between financial mobilization and financial intermediation. Within the financial landscape of Kenya, we've got 4 categories of SACCOs. Some of them are very successful. You have examples. We have averagely performing SACCOs. Some of them are struggling, and we also have SACCOs on the verge of collapse. The decision lies with the investor to do his analysis, guided by what we are giving here, and you make an informed decision. So how do you tell a well-managed SACCO? We have always insisted on protection of member deposits. This is done through appropriate insurance, proper financial policies, and proper crafting of the bylaws to guide the board in the management of SACCOs, such that the board does not play games with member money. Of late, the regulator has come on board to make sure that whatever savings that members put in their SACCO are well protected This is basically because of episodes that have been experienced in the past. For this to be done, a SACCO must have effective financial structures, starting from qualified personnel, competent boards, and well-enhanced softwares whereby you are able to get reports about your finances. The biggest asset in a SACCO are the loans given to members, and asset quality ensures that SACCOs do not lend for the sake of lending. They do proper loan appraisals, well-secured loans or properly guaranteed, and they ensure that they are recovered. That is why if members attempt to default on particular loans, they run into the wrong way with the SACCO because each and every shilling must be recovered for the benefit of the member. There is a rate of return. SACCOs are not non-governmental organizations. At the end of the year, the member wants some benefit, and that is what comes back to the investor in terms of dividends and interest on member deposits. It means that SACCOs manage their finances in a way that will enable them meet their obligations as and when they fall due. Liquidity ensures that members get their loans when they need them. Liquidity ensures that members pay all their overheads in good time, including taxes and what is due to the regulator. And liquidity ensures that SACCOs meet the statutory ratios set out by the regulator for prudential guidelines. At the end of it, once you analyze the SACCO, there should be signs of growth. There should be light at the end of the tunnel. That is basically how you can appraise a SACCO and make an individual decision on whether it is well run or not. Most SACCOs in Kenya have restricted membership, like MS SACCO belongs to doctors, dentists, pharmacists, their spouses, children over 18 years, and their employees. However, there are some SACCOs that have opened the common bond and they accept other members to join them. Kenya regulated non-deposit taking SACCO is not yet there, as we are yet to exhaust our niche market, which is the medical fraternity. Some SACCOs operate front office savings accounts. This is basically what you call a FOSA, and they offer banking services. It is basically deposits over the counter, just the way a bank does. And it is basically an added investment to the SACCOs if their numbers justify and the kind of clientele have time to go to the banking halls or patronize them through their ATM machines. This is basically geared towards maximizing the return to the investor by way of dividends. Basically, the traditional SACCO is the BOSA, the back office savings accounts, and that is what most of the SACCOs operate. And these are basically, for example, provide avenues for members to save and borrow loans such as development loans, emergency loans, school fees loans. Basically, they offer an avenue of members to borrow from their SACCO instead of bank loans. Even SACCO concept, and that is what we operate. What benefits do you accrue by joining a SACCO? One, a SACCO instills a saving discipline. By virtue of being required to save something at the end of every month, like a minimum savings of 10,000 a month or 5,000, instills a savings culture on that particular member, which improves their wealth in the long run. Once you save that money into the SACCO, it is not very easily accessible, apart from when you are borrowing a loan, and this avoids impulsive, what you call the impulse spending without a budget or spending them because the money is available, which is a good thing in the wealth generation. The savings in a SACCO do not attract bank charges at all. The money in a SACCO can only grow. It can never reduce. So that means it is a good avenue, actually the best preparation for retirement. Of course, SACCOs pay interest that is much higher than the banks. The information is out there in the market. So those are some of the benefits that will encourage you to invest in a SACCO. Of course, there are contemporary issues of late, like the maximizing on information technology, mobile money transfers, mobile loans, Some SACCOs are into agency banking. Some are in deposit-taking businesses. Some issue ATMs with some banks. We have mobile banking, what you call them SACCO, and electronic or internet banking as the latest developments in the SACCOs, mimicking exactly what the banks are doing for their clients. Basically, that is what you call a SACCO, whereby like-minded people come in together, form a common bond. They encourage each other to save seriously. Then you borrow when it is time to borrow, and you repay the loan for a little interest. Then a properly run SACCO should be able to give you some return at the end of the year. What do you need to do as a SACCO member? Save regularly, borrow wisely, and repay promptly. These SACCO loans are basically cheaper than the bank loans by far. The traditional SACCO loan is actually at 12%. That is the development loan. I said through innovation and product diversification, there are other products, but basically the traditional product is 1% per month. Once you borrow from the SACCO, you are assured of repaying your loan to completion at the same rate. SACCOs do not review their interest rates like banks do. The central bank recently allowed some banks to employ what you call the risk-based lending, and we shall be witnessing the interest rates going all the way to past 20% as they take care of the risk profiles of the borrowers. That does not happen in a SACCO. You are assured of completing your loan at the rate you borrowed. SACCO members earn interest. It is a very beautiful model whereby you have a debt that belongs to the SACCO. Your money is also safe, and on top of it, you earn some interest and dividends. This lowers your cost of funds as you continue accumulating wealth, as I will display on the last slide. You are still expected to maintain some level of saving, and basically you get to be forced to grow your wealth even as you repay loans. This is a unique attribute found in SACCOs, and as I said, it is the best preparation for retirement because the wealth gets to accumulate and grow even before you realize. The model in SACCO loans requires guarantorship, and this basically encourages members to join in large numbers so that they form guarantorship clubs to co-guarantee each other. And this is also a good opportunity to be each other's prefect so that you don't guarantee Mutua, CPA Mutua, and you keep quiet as he develops in the opposite direction because he borrowed a development loan. These SACCOs also lend against collateral, and you can also borrow within your deposits. So the issue of guarantors is well circumvented by what you choose to do, either forming guarantorship clubs to co-guarantee your colleagues, borrowing against your deposits, or providing collateral, which is also secure as the loan, and you get to benefit. Due to the confidence that members have in their SACCOs, they also engage in some projects. Key among them is land projects, where SACCOs buy large tracts of land, negotiate for below market rates, do proper due diligence to ensure that the because and they have to go from the SACCO and acquire the project without any stress. If an individual was to do it alone, rather than when you pull efforts together and it is done through your SACCO. So that is why you need to invest in a SACCO. Let's come back home and look at why specifically you need to invest in KMA regulated non-withdrawable deposit taking SACCO Limited. The reason is because we have a cure for doctors. As they are busy taking care of our health, we burn the midnight oil here to take care of their finances. We are what you can call a one-stop shop for financial products. That is basically a financial hypermarket, taking care of more than just your finances. KMA SACCO will walk through right from . you being a medical officer to a senior consultant, and all the journey will be full of benefits. We have come of age. We've been around since 1998. 24 years is good enough to understand the market and the needs of our members. We don't pay rent. We operate from an office that we purchased in 2011. And we widened the common bond to include pharmacists and medical students in 2012. Currently, we are 6,400 members strong. We have 5.37 billion, and we can give you money all the way to 44 million, which is the ceiling that was set by SASRA when we became regulated in July last year. It is basically 10% of our core capital. So as we continue strengthening the SACCO and growing the core capital, the figure will continue rising. Those who are aware of what you call the personal loans in the SACCO, in the banks, will agree with me that you don't go beyond 6 million. In fact, most of the personal and secured loans are capped at 4 million. So we are multiplying that by 10 here because we understand the medical professional. We've been growing over the years. You are seeing over the last 5 years, we have almost doubled the asset base. So we are moving from strength to strength due to the prudent management of the board that has been elected over the years. The loan book has equally been growing, moving from 2.1 billion to 3.4 billion as per the last audited accounts. And currently we are also increasing in terms of our core business. We said a SACCO needs to have a rate of return. It is not an NGO. So when you look at the whatever KMS SACCO has been paying back to the investors, it has been growing over the years, year after year. And it is basically one of the reasons why I highly encourage you to pick a loan form and join the SACCO if you have not done so. If you are already a member, I encourage you to just multiply your savings and borrow seriously. We have a diversified range of products from the development loan, 3 times your savings, flexi development loan, 4 times your deposits, emergency loan, 2 times your deposits to a maximum of 1 million, repayable within a year. Most SACCOs peg their emergency loans between 50,000 and 100,000, but here it is 1 million. Asset financing loans, whereby we are able to fund particular assets. Equity release loan is borrowing against an asset that you already own. Asset financing is where we finance you to acquire the asset. School fees loan to the full amount of the fee structure, repayable over 24 months. Insurance loan, intern loan, where we work with a medical professional right after graduation. Home loans, and we are so confident here, we give you your dividends in advance even before the year ends by way of a dividend advance loan, because we know our prudential guidelines and our systems do not lie to us. So basically, those are the loan products. We also provide investment opportunities within KMS SACCO in terms of land projects. We offer opportunities for fixed deposits. Through our very own TIBA insurance agencies, we can take you to money markets and wealth management funds, whereby you need to keep just multiplying your wealth. In terms of real estate, we have successfully rolled out Gong Phase 1, Gong Phase 2 land projects. We have done Kitengela, we've done Moore Hills, we have finalized on Kangundo Road, and we finance members to acquire plots at these particular projects, repayable all the way up to 60 months. So don't get stressed in terms of where to get land. Don't get stressed in terms of how to pay for it. And don't be in a hurry for paying for it. Take your time and pay all the way up to 60 months. Through the TIBA insurance agency that we own, I said KMS SACCO is a financial hypermarket. So we take care of the member right from savings, loans, investments, land, and now insurance. we provide the full range of insurance policies to any insurance company of your choice. We don't force you to any, although, however, we have negotiated some attractive schemes, but we are able to meet your needs for whatever underwriter that you choose. It is the underwriter that will pay us commission. You are not going to get any additional cent in terms of your premiums. Professional indemnity, we are able to offer from as low as 6,400 all the way, depending on the limit that you choose and your profession. So talk to us. We have the solution. What do we offer our members? Investment opportunities, as I've highlighted. We have diversified loan products, attractive insurance packages. We teach you to embrace a savings culture so that you retire with money. We have attractive rate on all our loans, and we have attractive return on dividends and interest on member deposits, as I'll demonstrate shortly. We've been tried attractive dividends on shares. There is no SACCO in this market that has ever achieved the 20% that we are paying in our share capital. And again, our share capital is among the highest within the market, between 30,000 and 100,000. So don't look at the percentage, look at how much you are getting back in absolute terms. We continue to customize loan products to meet our members' needs. We lend all the way to 5 times your deposits, depending on your loan category, and you are able to repay that home loan all the way to up to 20 years, depending on your age and your ability to pay. When we are pricing our loans to members, we consider all sources of income, not the payslip only. We accept your bank statements, we accept your M-Pesa statements, and any other source of income that you demonstrate consistently. We are able to factor that because we understand our client. The last time we paid dividends to members, we were able to share that cake. And we lead the leaders in the market. We are able to give back interest on member deposits amounting to 74% of our total revenue. When you add that to the 8% dividends, you realize that it takes a lot of courage for any investment to give a return of 81% back to the investor. And that is basically what we do here. To ensure that the government builds hospitals to continue employing our members, we also pay our taxes in good time. We are very much aware that stability is key, so we save 10% of whatever revenue that we get in terms of reserves, again owned by the SACCO. And basically, that is the best example of what you call shared prosperity, a win-win situation for everyone within KMA SACCO. As I finish, so that I put some truth into my discussion, this is a real life example of a member who had deposits of 3 million as at the 1st of January 2021. The same member also had a loan balance of 7.2 million at 12%, a development loan. So the member continued saving throughout the year at 10,000, and the total interest he paid on his loan was 832,000. Come the end of the year, the SACCO returned back 245,000 to that member, basically meaning that you are refunded 30% of the interest paid. So on top of availing 7.2 million at 12% for other developments, the member was able to recoup 30% of the interest paid to the SACCO. And because of the 10,000 monthly saving, he was able to accumulate an additional 120,000 within that year on top of the 3 million. So basically, we are forcing members to grow in terms of wealth. And this particular loan is repayable over 8 years. So by the time the loan is paid to completion, if the member does not refinance, he will have accumulated an additional 960,000, bringing his savings to 3.96, which will qualify him to get 12 million. Growing from strength to strength, that is a real life case. Of course, the details of the member cannot be shared because of our duty of secrecy, but the figures are factual. What is your next step? Please get into our website if you are not already a member and download a membership form, attach a copy of your ID, attach a copy of your PIN, 2 passport size photos, a copy of your certificate, or even board license renewal retention, and send 3,000 shillings to our pay bill number 54900 or any of our bank accounts that I will share shortly. And you begin the journey to your financial wealth within KMA regulated non-withdrawable deposit taking SACCO. The 3,000 shillings is not joining fees. Joining fee is only 1,000 there. 2,000 shillings is your initial startup in your journey to generate wealth within the SACCO that leads the leaders. Find us on Facebook, follow us on Twitter, call us on those phone numbers, drop us an email, and we are ready to start the journey in making you financially independent into the unforeseeable future. Thank you.
Thank you very much, CPA, for that succinct presentation. It's very reassuring, allow me to speak as a member, to see where we are as a SACCO and the strides we have made. So allow me to go right into the Q&A. There's a question in the chat from Dr. Mwaniki. I can see Dr. Riro chipped into the question, but I just want you to have a look at, tell us what you think. So about the FOSA, what are your thoughts on FOSA and the SACCO taking that route? Dr. Riro brought out the issue of numbers, but anything else you'd want to add?
Yeah, thank you. FOSA basically thrives in where we have large numbers because it has a couple of overheads, like the cash in transit, it has full-time security. The prudential ratios by the regulator are a little bit more stringent than those SACCOs that are not deposit taking. But the biggest factor is basically the numbers that can justify. People who are ready to channel their salaries through the FOSA so that the salary processing fees make business sense. So basically that is the key consideration. Thank you.
Thank you, Andrew and Riro, for that. So I'll go into our Q&A. I can see Dr. Manik, you have another question on the chat. Kindly post your questions on the Q&A so that you make it easier for us to capture them. There's a question on the other kinds of security acceptable by the SACCO, other than guarantors, the logbooks, and land title deeds. What else do we accept?
Yeah, basically we accept land, good land within municipalities. When we finance motor vehicles, the logbook becomes the title. And the next one are the guarantors from members. If you have a fixed deposit with a SACCO, it can also serve as a security. Members with fixed deposit for life insurance also used as collateral for borrowing. So basically, those are the securities accepted by the SACCO.
Okay, thank you. So Dr. Deborah, you do not have to be a member of Kenya Medical Association to join the SACCO. The SACCO is a different entity from the Kenya Medical Association itself. It was birthed from there, but the SACCO is a different entity. So someone is asking about academic loans for postgraduate programs that may take 3 to 6 years. Any of the panelists can answer, as well as CPA. Anyone just jump in?
Yeah, thank you. That is catered within our school fees loans. That's why they were enhanced to cover the full amount of the fee structure and the repayment enhanced to 24 months. They can also be sorted by loans within deposits. And we also have programs where the member can save specifically for that particular undertaking ahead of going back to school. Our other types of loans like development loans can also be used to pay school fees. It is just a matter of careful planning and engaging us to tailor-make the particular product for you. Thank you.
Yes, so the SACCO is very flexible when it comes to these products and attending to your needs. So just reach out to the SACCO. We had put the contacts on the chat. Maybe someone can repost the contacts for ease. We have someone asking, what's the benefit of increasing share capital, say from 30,000 to the maximum of 100? That's the first question. And the second question that I also want you to take, CPA, is can a group of doctors coming together as a chama join the SACCO as a group?
Thank you. The benefit of increasing your share capital is increased benefits. 20% is what we paid on share capital last year. So 20% of 30,000 is 6,000. 20% of 100,000 is 20,000. On top of stabilizing the SACCO, for be able to provide much more benefits, you also benefit individually in terms of dividends. An organized chama that is registered with the registrar can join the SACCO as a corporate member. Just reach out to us. We shall guide you and give you all the requirements. We have corporate members. Thank you.
So I'll go ahead and answer Geoffrey Ogaro. Thank you, Geoffrey. Yes, I agree. It was an excellent presentation. And is the share capital counted as money forfeited even if one decides to close shop with the SACCO? We wouldn't say it's forfeited because you continue to earn your dividends on that investment. So you are an owner of the SACCO, so you continue to earn. But if you'd like to totally let go, then you can transfer or share. CPA, kindly clarify that last statement.
Yes, an exiting member, sorry. An exiting member can transfer his or her share capital to another member and you get paid. Yes. If you leave it within the SACCO, you continue earning dividends. So it is available, it is transferable, but it cannot leave the SACCO. It's like the bricks of a building. Thank you.
Okay, thank you. This is a good question. I like seeing questions touching on TIBA. So regarding the PI cover provided by the SACCO, why is it that after paying the premiums, a lawyer is not provided when appearing before the medical board? Shouldn't provision of a lawyer be a basic provision of the professional indemnity cover? Do we have our TIBA staff on board? We can have a look at that. As we go to the next one, if about 30% of members who borrow loan contribute to annual growth of SACCO, why is this group subjected to the same dividend rate as the 70% non-borrowers? Why not give the loanees a higher dividend rate?
Okay, let me start with, sorry.
Very interesting question.
Let me start with the TIBA one. TIBA
Yes.
Insurance Agency is an agent of the insurance companies. So the professional indemnity we provide has got an underwriter behind. Most of the underwriters provide lawyers to their clients, but we can engage us on a specific case through tiba@kemesacco.com so that we escalate any lapses to the particular underwriter we deal with. They are bound to listen to us because of the numbers that we give them. But we are agents of particular insurance companies like Madison, UAP, and any other where the member chooses. In case of any particular need, we can always get in touch with them for the benefit of the member. So please get in touch with us and we shall escalate it appropriately. On the question of dividends, there is a principle of equality. Equality within SACCOs, one member, one vote. A member with 1 million shillings is treated the same way as a member with 100 million. So it may not be practically possible to vary the dividend rate between the borrowers and the non-borrowers. Thank you.
Thank you. Kindly mention all alternatives to guarantorship for loan collateral. Is money in MMFs accepted as collateral? Are treasury bonds accepted as collateral? It's a good question, CPA.
Yeah, I talked about title deeds, logbooks, fixed deposits within the Sacco. And we can always look at those cases. The challenge is what is within our control for the purpose of securing member money, because the regulator requires each and every shilling is guaranteed and secured within what we have control over. So fixed deposits, yes, within the Sacco. Move the money into money market and invest through TIBA Insurance Agency. We shall have control over that. And engage us on any particular need that, again, we can customize on a need-by-need basis. Thank you.
Kindly, is there a land project coming up? I missed out on the other projects. Chair, would you like to take that question?
Yes, thank you, Dr. Omondo, and thank you, the member for that question. We are in the process of identifying suitable land. In fact, I'll also appeal to you, the member, to get in touch with the Sacco in case you have land that you think is suitable and that you think that it would be of interest to many members. Because what we usually do is to identify suitable land and negotiate the lowest price possible, so that then we can pass the benefit to the member. And that's why you've seen that the land projects that we've been selling have been going at very affordable prices. So we're in the process of looking for land now, and we hope that we can launch one before the end of the year. Thank you.
Thank you, Chair. So that answers the question on land. What determines the 7% on deposits? Is there a likelihood of it going higher?
Well, interest on member deposits depends on the profitability for the year. There is a possibility of it going higher. There is a possibility of being maintained. There is a possibility of it going down depending on the profitability of that particular year. So what will happen, as I said, a Sacco is a members club. We encourage members to save maximally, borrow regularly, increase the loan uptake, repay promptly, because it is from the same members that the Sacco makes money to pay the dividends. Thank you.
Are Saccos allowed to invest in profit-making ventures like the money market, stock exchange, real estate, etc., so as to earn more interest to pay to members, i.e. to supplement the interest?
Yes, that is actually what KMS Sacco does to be able to supplement the low loan uptake. We generate, there are investment policies that have been set out by the board that generate much more money to supplement interest from member loans. Thank you.
Someone asked about the stock
market.
Yes, the stock market.
Yeah, the regulator does not allow Saccos to invest in the stock exchange. Basically, any investment that the Sacco undertakes must be capital secured. The board is not allowed to gamble with members' money. It can only do what is assured of the capital being preserved in a worst case scenario. Thank you.
Yes, thank you for that. So Dr. Francesca asks, please expound more on the money market fund operated by TIBA. So I've seen the same question twice by Dr. Laban and Francesca.
Thank you. Money markets are not operated by TIBA. They are operated by independent fund managers like Britam, CIC, Sanlam, and Corp Money, among others. What TIBA does, TIBA is an agent. The same way we arrange insurance for you is the same way we are going to arrange you to invest money into those money market funds In fact, the funds are paid directly to the fund managers. We only hand commission for facilitating that. So basically, a money market fund is a capital secured investment whereby you invest your cash, working more like a fixed deposit, and you get to earn interest daily that is compounded and paid to you at the end of the month. That is, the TIBA Insurance Agency is a facilitator, an agent, which earns commission to increase member dividends. Thank you.
So Dr. Kiriga asks about the maximum turnaround time for an emergency loan.
The maximum turnaround time of an emergency loan is 7 days, but of late we've been issuing them within 3 days. Unless it lies within a weekend, members are assured of getting their emergency loans in under 3 days. Thank you.
I'll bring you back to returns. So Dr. Gerald asks, why don't we get dividends of about 14% like some other SACCOs? I think you covered this in your presentation.
Yeah, but if the treasurer is on board, he can help me out. Dr. Akuno?
Dr. Akuno is not on board.
Okay.
Yes.
Yeah, basically it depends on the whatever revenue that the SACCO makes is what is distributed back to the member. And when you look at my slide, just a minute. When you look at my slide on the return to the investor, basically the dividends that we paid last year, you realize that let me see whether I'll be able to share the screen. You realize that the SACCO paid close to 81% of the revenue generated back to the investor in both interest on member deposits and dividends. What we are saying here is out of every 100 shillings, 81 shillings are returned back to you. Basically, that is how you look at it. Don't look at the percentage. For example, a SACCO may tell you that we have paid 14% of dividends on share capital, yet the SACCO has a share capital of 5,000 shillings. 14% of 5,000 shillings is not comparable to 7% of 100,000. That is how you look at it. Not the percentages per se, but the absolute terms. And very importantly, what percentage of the generated revenue is being returned to the owner of capital. Thank you.
Thank you, CPA. Dr. Miriam asks, why has the SACCO capped the maximum capital share at 100,000 shillings?
Yeah, the capping of share capital is an AGM decision. The law provides that members in an AGM set the amount of share capital, provided no single member owns more than 20% of the share capital of the entire SACCO. Now, share capital is an expensive form of capital within a SACCO. If, for example, we had all the members, the 6,400 members with a million in share capital, and you pay 20% of that, it will not be affordable for the SACCO. So from time to time, on recommendation by the board, the AGM sets the ceiling, and because of the principle of equality, it applies to all the members across the board. So it is basically an AGM decision that is anchored in law. Thank you.
So there's a question on if I would like to use my title. Oh, Dr. Mercy has answered that on the chat. Question by an anonymous attendee regarding professional indemnity. What steps is TIBA taking to ensure that they don't just broker, but negotiate favorable terms for members?
Yeah, we are going to be engaging the members to find out their particular needs. Then we also engage the underwriters, the particular insurance companies, to listen to our needs and try to tailor make what meets the needs of our member. It is a discussion we are taking very seriously going forward. We shall be doing managed surveys to find out what the members really need. Then we pass the same to underwriters. We want to provide more value than just linking the underwriters with the insured. Thank you.
Thank you, CPA. An anonymous attendee asks, okay, this question has been answered. Maybe I can just mention so that you hear. We answered it earlier concerning the shares, the share capital and being able to earn dividends once you leave. Yes, you can earn your dividends. It's not locked. So you can access your dividends as an investor of the Sacco.
Thank you.
Okay, I think we've answered this. We've answered most of those. Am I missing any questions on the chat? Give me a minute, let me peruse through. Dr. Anthony, we've noted your suggestion on the international medical cover. The Sacco is working on it. Okay. Any more questions? I feel like we've answered all the questions. Oh, Dr. Godfrey, the old pay bill number incurs unfair charges when currently there are available bank facilitated till numbers. Could we prefer more modern, less costly ways of channeling money?
Yeah, we've taken note of that. We shall engage the board and make suggestions for more friendly and less expensive ways of channeling deposits to the Sacco.
Yes, thank you for that. I can see it's 8. We can take the last questions. Can you increase the development loan duration to be more than 60 months? Is it flexible?
Currently, it is flexible. For borrowers borrowing more than 5 million, they can pay all the way to 96 months. So as I said, we are very flexible and very friendly. Just engage us directly. We shall meet you at your point of need. It's already available.
So CPA, back to the example you gave us, the member. What was the rationale for refunding 30% of interest paid to the Sacco by the member?
The point here is it was highlighting the benefits a Sacco member enjoys by being a Sacco member. 30% is the total dividends the member paid. The total dividends the Sacco paid the member compared to the total interest he paid on loan in that particular year. It is an unhanded benefit. You get 12% capital to go and invest elsewhere. You continue servicing your loan, and at the same time, whatever cost that you incur is subsidized. That was the purpose.
Thank you. Thank you, CPA. I believe we've answered all the questions in both the chat and the Q&A.
Dr. Obodo, there's one member who has asked,
yes,
if you've already reached the maximum with your share capital, and you get some from an existing member, does your share capital go beyond? I think here you will not be allowed to receive more share capital if you've already reached 100,000.
100,000.
Yeah.
Thank you for that, Dr. Korech. So the maximum share capital is 100,000. You are not allowed to have more than 100,000. Dr. Anthony asks, what is the process for buying out loans from banks?
The Sacco member, as I said, saves money within the Sacco. Once you qualify for a loan, we don't ask you the kind of development you are going to develop. So simply join the Sacco, save, borrow 3 times or 4 times, go pay out to the bank, and continue servicing the Sacco loan. We don't do what you call post-credit supervision, whereby we follow you to find out what is this development that you are really doing.
Okay. Dr. Nelson, I see, asks, in the case of using a title as collateral, will you still be limited to borrowing 3 times the savings?
If you are borrowing a development loan, you can borrow either 3 times. If you are borrowing a flexi development loan, you will borrow 4 times. What the collateral does, it will save you the looking for guarantors. It will be securing for a loan. However, we have asset secured loans, what you call the asset finance and equity release, where the Sacco is able to loan you up to 2/3 of the value of the asset, or even 80% in case you are doing equity release. So it depends on the category of loan you are looking for. Engage us and we are going to give you a tailor-made solution. Thank you.
So Dr. Nelson, that's specific, the multiplier is specific to a specific loan. So depending on what loan you take, it has a specific multiplier. Can the Sacco get medical covers for members and their families older than 65 years?
Yes, we have senior covers that has been arranged with various insurance companies through TIBA. That is already in existing on a case-by-case basis. Thank you.
Okay. So Dr. Peter has asked an interesting question. Who will receive share capital from an exiting member? That question has flashed out, but I think if what Dr. Okomo was saying is that if all the members have the maximum share capital and there's a member who's exiting, who will receive their share capital in that case?
Yeah, again, on a case-by-case basis, the Sacco can arrange that to be taken up by the new members. An incoming member can be able to take up that share capital and the Sacco swaps on a case-by-case basis. It's also a tall order to have all the members reaching 100,000, the maximum share capital. But in case that happens, on a case-by-case basis, we can address that particular need.
Dr. Robert is asking about the seniors health cover. How can the information be made more easily available?
Kindly drop us an email on tiba@kemesacco.com and we shall respond to you. You can also call us on our contacts and we shall be able to reach out to you and give you an exact answer depending on the particular product that you need. So the tiba@kemesacco.com.
Yes, the contact information is on the chat. We had posted it earlier on. You'll be able to access it there for both TIBA and the Sacco for more information. You can still also visit the website and you'll get all the contacts. The Sacco is always willing and quick to answer your calls and respond to your emails. So CPA, Daniel says, thank you. I think we can close. It's 8:10 where we've kept time today. Thank you, CPA, for that informative presentation and that refresher on the basics of how our Sacco model works. I'd like to welcome, before I welcome Dr. Koech, our chair, I'd like to remind us to fill the survey at the end of the webinar so that we can serve you better. That information is very useful. And asanteni sana for coming to the webinar. I also want to remind the members that you're our #1 marketers. So when we have webinars like this and want to get more members, please share the links that you get on your phone. Any doctor can join using their KMPDC number if they're not members. So the more the merrier, and they're welcome. So over to you, Dr. Koech.
Thank you very much, Dr. Obondo, for a beautiful moderation. Thank you, Andrew Mutua, for a very engaging discussion this evening. Beautiful presentation. And, you know, you always think that you've understood some models, some issues about the Sacco, especially for us who are serving the members. But then you realize that when you listen to a presentation, there are many other things that you've not picked up. So this was an excellent presentation, very timely also for the members. And I'm sure they have gained something. And I'm sure also that they are going to take up a lot of our products, since now they are aware about the products that they didn't even know about. Thank you, members, for joining in and for actively participating. The questions that you asked broadened the discussion, and I'm sure even those who did not ask questions have benefited. So I look forward to seeing you again in the next webinar that we are going to organize, and wish you all a good night. Thank you.